A 47-page document, classified, marked for internal circulation only, distributed to finance ministers of 9 countries, and never meant to reach Western eyes. But 3 weeks ago, a source inside the South African Reserve Bank made a decision that could reshape global finance. They leaked the document to an independent journalist in Johannesburg, and what is inside that document confirms everything they told you was a conspiracy theory. The BRICS currency is not a concept. It is not a discussion. It is not something they might consider in the future. It is a fully designed monetary system with an implementation timeline, a technical architecture, and a launch date. The document is titled Project Unity, Framework for Multilateral Settlement and Reserve Currency Integration. It lays out exactly how Brazil, Russia, India, China, South Africa, and their new partners plan to dethrone the dollar as the world's reserve currency. I have spent the last 2 weeks analyzing every page of this document, and today I am going to break it down for you line by line. Because what they are planning is not just a threat to American financial dominance, it is a direct attack on the value of every dollar in your bank account. The media buried this. The government ignored it. But you are about to see the truth. To understand why this document matters, you need to understand what the dollar's reserve currency status actually means and why losing it would be catastrophic for every American. Since 1944, the US dollar has been the world's primary reserve currency. This started at the Bretton Woods conference, where 44 countries agreed to peg their currencies to the dollar. The dollar itself was pegged to gold at $35 per ounce. This made the dollar as good as gold. Every country needed dollars to conduct international trade. In 1971, Nixon ended the gold convertibility. The dollar was no longer backed by anything physical, but by then, it did not matter. The dollar had become so entrenched in global trade that countries kept using it anyway. And in 1974, the petrodollar deal with Saudi Arabia sealed dollar dominance for another 50 years. Here is what reserve currency status gives America. It gives us the ability to print money without immediate consequences. When the Federal Reserve creates trillions of dollars, that inflation gets exported to the rest of the world. Other countries hold dollars in reserve. They absorb our excess currency. They bear the cost of our money printing while we enjoy cheap imports and low interest rates. It gives us the ability to run massive trade deficits. America imports far more than it exports. We send dollars overseas. Those dollars come back as investments in treasury bonds and American assets. The world finances our consumption because they need dollars to function. It gives us the ability to sanction anyone. Because the dollar is the lifeblood of international trade, we can cut any country off from the global economy with the push of a button. We freeze their assets, we block their transactions, we exclude them from the SWIFT payment network. This is financial nuclear warfare, and only the country with the reserve currency can wield it. For 80 years, this has been the foundation of American power, not our military, not our technology, our currency, and the BRICS nations have decided they are done living under that system. The leaked document shows they have found a way out. Let me walk you through what is in this document. Because the details matter, the specifics reveal exactly how serious this is. The document is organized into 7 sections. I am going to break down the 5 most critical sections that directly impact you. Section 1 is titled Rationale and Strategic Objectives. This section lays out why the BRICS nations are creating an alternative currency. It does not mince words. The document explicitly states that the weaponization of the dollar through sanctions has made it an unreliable store of value for sovereign nations. It cites the freezing of $300 billion in Russian central bank reserves in 2022. It cites the exclusion of Iran from SWIFT. It cites the secondary sanctions on countries that trade with American adversaries. The document calls these actions proof that dollar-denominated reserves are subject to political risk that no sovereign nation can accept. This is critical. The BRICS nations are not creating a new currency because they hate America. They are doing it because America showed them that dollar reserves can be confiscated at any time. We turned the dollar into a weapon. and now they are building a shield. Section 2 is titled Technical Architecture. This is where it gets specific. The BRICS currency is not like the euro, a single currency replacing national currencies. It is a settlement layer, a basket currency used for international trade between member nations. The document describes a system called the unit. The unit is a digital currency backed 40% by gold and 60% by a basket of member nation currencies. The gold backing is held in allocated reserves in each member country. Russia holds gold in Moscow, China holds gold in Shanghai, India holds gold in Mumbai. The gold is audited quarterly by a rotating committee of member central banks. The 60% currency basket is weighted by GDP. China's yuan has the largest weight at approximately 32%. India's rupee is second at 18%. Brazil's real, Russia's ruble, and South Africa's rand make up the remainder, along with the currencies of new members like Iran, UAE, Egypt, and Ethiopia. The document specifies that the unit will be issued by a new institution called the BRICS Monetary Authority, headquartered in Shanghai with satellite offices in Moscow and Mumbai. This authority will function like a central bank for international trade, but without the ability to print currency for any single nation's benefit. Section 3 is titled Trade Settlement Protocol. This is the operational heart of the system. The document describes a settlement network that bypasses SWIFT entirely. It is built on a distributed ledger technology, not a public blockchain like Bitcoin, but a permissioned ledger controlled by member central banks. When a Brazilian company sells soybeans to China, instead of settling in dollars through correspondent banks in New York, the transaction settles directly in units on the BRICS ledger. The Brazilian company receives units, which can be converted to reals through the Brazilian central bank. The Chinese buyer pays in units converted from yuan. The document projects that this system will be operational for pilot transactions by January 2026. Full implementation across all member nations is scheduled for January 2028. That is less than 3 years away. Section 4 is titled Gold Acquisition and Reserve Strategy. This section explains why central banks have been buying gold at record rates for the past 3 years. It was not random, it was coordinated preparation. The document reveals that BRICS members agreed in 2022 to a secret protocol requiring minimum gold reserve ratios before the currency launch. China committed to holding 5,000 metric tons. Russia committed to 3,000 metric tons. India committed to 2,500 metric tons. Smaller members have proportional requirements. According to official data, China now reports holding 2,164 metric tons of gold, but the document suggests this number is deliberately understated. It references off-book purchases through state-owned enterprises and sovereign wealth funds that are not counted in official reserves. The actual Chinese gold position, according to the document, exceeds 4,200 metric tons. This explains the relentless central bank gold buying. This explains why gold prices have been rising despite a strong dollar. This explains why the World Gold Council reports record purchases quarter after quarter. They are stockpiling for the launch. Section 5 is titled De-Dollarization Transition Path. This is the section that should concern every American. It lays out a deliberate, phased strategy to reduce global dollar dependency. Phase 1, which began in 2023, focuses on bilateral trade agreements in local currencies, China paying for Saudi oil in yuan, India buying Russian oil in rupees, Brazil and Argentina trading in local currencies. This phase is already well underway. Phase 2, scheduled for 2025 to 2027, focuses on unit pilot programs. Select trade routes, specifically energy and commodities, will transition to unit settlement. The document identifies oil, natural gas, iron ore, soybeans, and rare earth elements as priority commodities. Phase 3, scheduled for 2028 to 2030, focuses on full integration. Member nations will maintain a minimum percentage of reserves in units rather than dollars. The target is 30% of foreign exchange reserves in units by 2030. The document includes projections for dollar demand. If BRICS members shift just 20% of their current dollar reserves to units, that represents approximately $800 billion in selling pressure on the dollar. If non-member nations that trade heavily with BRICS follow suit, the total could exceed $2 trillion. Now, let me explain what this means for you personally, because this is not abstract geopolitics. This is about the purchasing power of every dollar you earn, save, and spend. The dollar's reserve currency status allows America to run a system that would be impossible for any other country. We print money. We run deficits. We import more than we export. And we never face consequences because the world needs our currency. When that demand disappears, the consequences arrive all at once. Impact number 1. Inflation accelerates. Right now, when the Federal Reserve prints money, much of that inflation is exported overseas. Foreign central banks hold dollars. Foreign businesses hold dollars. Foreign governments hold dollars. That soaks up the excess currency. When those holders start selling dollars, when they convert to units or gold or anything else, those dollars come home. Trillions of dollars that have been parked overseas for decades come flooding back into the American economy. Too many dollars chasing the same amount of goods. Prices rise, your purchasing power collapses. The document projects a 15% to 25% decline in dollar purchasing power within 5 years of full implementation. That is not a recession. That is a permanent reduction in your standard of living. Impact number 2, interest rates rise. The U.S. government runs a $2 trillion annual deficit. We finance that deficit by selling treasury bonds. Foreign central banks, particularly China and Japan, have been the primary buyers. If BRICS nations stop buying treasuries, if they sell their existing holdings to fund unit reserves, someone else has to buy that debt. That someone is you, the American investor, the American pension fund, the Federal Reserve through money printing. To attract buyers for $2 trillion in annual debt issuance without foreign demand, interest rates must rise dramatically. Mortgage rates that are already painful at 7% could hit 10% or higher. Credit card rates could exceed 30%. Car loans, student loans, business loans all become more expensive. High interest rates crush the economy. Housing prices fall, businesses fail, unemployment rises, and the government, facing declining tax revenue and rising interest payments on existing debt, prints more money to cover the gap. That creates more inflation. It is a doom spiral. Impact number 3, the stock market reprices. American stocks are valued based on assumptions of continued dollar dominance. Corporations earn profits overseas and repatriate them in dollars. Investors around the world buy American stocks because they trust the currency. When that trust erodes, foreign investors sell. American companies that earn revenue in BRICS nations face currency losses. Valuations that assume perpetual American economic dominance get revised downward. The document includes a risk assessment section that projects a 30% to 40% decline in dollar-denominated asset prices during the transition period. That is your 401k. That is your retirement account. That is your savings. Let me lay out the timeline from the document so you understand exactly how fast this is happening. 2024, which is already underway. Bilateral currency agreements accelerate. More countries sign deals to trade in local currencies. Gold accumulation continues at record pace. BRICS expansion adds new members, increasing the economic bloc's share of global GDP. The unit technical infrastructure is finalized. Central bank digital currency integration testing begins. First pilot transactions between China and Russia in units for energy trade. Pilot program expands to all original BRICS members. Saudi Arabia, now a BRICS partner, begins accepting units for oil payment from member nations. This is the critical inflection point. Oil priced in something other than dollars breaks the petrodollar system. Non-member nations are invited to participate in unit trade settlement. Countries in Africa, Southeast Asia, and Latin America join the network. Dollar alternative becomes globally available. Full implementation. BRICS monetary authority fully operational. Member nations begin shifting reserves from dollars to units. The selling pressure on the dollar begins in earnest. Target of 30% reserve allocation to units achieved. Dollar share of global reserves falls from current 58% to below 40%. The transition is complete. The dollar is no longer the dominant reserve currency. This is not hypothetical. This is not a threat. This is a plan. It has dates. It has milestones. It has technical specifications. And it is being executed right now while the American government pretends nothing is happening. Now you might be asking, if this document is real, why have we not heard about it? Why did the media not report on it? Why did the government not respond? There are 3 reasons. Reason 1. Confirmation creates acceleration. If the US government officially acknowledged this document, it would validate everything the BRICS nations are claiming. It would signal to the world that de-dollarization is real, it is happening, and America is worried. That acknowledgement would accelerate the process. Countries on the fence would rush to join BRICS. Investors would dump dollar assets. The confidence that sustains the dollar would evaporate faster than any economic plan could address. So they stay silent. They dismiss it as conspiracy theory. They mock anyone who discusses it. The strategy is denial. Reason 2. There is no good response. What can America actually do to stop this? We cannot sanction BRICS. They are half the world's population and a third of global GDP. Sanctioning them would destroy global trade and hurt America as much as anyone. We cannot offer a better deal. The dollar's advantage was stability and neutrality. We destroyed that by weaponizing sanctions. Once trust is broken, it cannot be rebuilt with promises, only with decades of reliable behavior. We do not have decades. We cannot outcompete the unit. Our currency is backed by debt. Theirs will be backed by gold. In a competition for credibility, gold wins. The government is silent because they are out of moves. They are watching the chess pieces move across the board and realizing they have already lost. Reason 3. The transition protects the powerful. The billionaires know what is coming. The central bankers know. The politicians know. They are positioning themselves. They are buying gold. They are buying real estate. They are buying commodities. They are buying assets that hold value when currencies collapse. And they are doing it quietly while telling the public that everything is fine. By the time the average American realizes what happened, the wealth transfer will be complete. The people who understood the game will own the hard assets. The people who trusted the system will own worthless paper. This is not incompetence. This is strategy. The people at the top are not failing to protect you. They are protecting themselves at your expense. So what can you do? How do you protect yourself when the entire global monetary system is being restructured? You do what the central banks are doing. You do what the billionaires are doing. You do what the BRICS nations are doing. You convert paper into hard assets. Step 1. Acquire physical gold and silver. This is the foundation. Gold is the asset that will back the new system. When the document says 40% gold backing, that tells you gold is money. Not an investment, money. If you have $100, buy silver. 3 or 4 1-ounce rounds. Silver will rise with gold. It is more volatile, more affordable, and has industrial demand that supports the price. If you have $1,000 split between silver and gold, 20 ounces of silver and 1/10 ounce of gold. This gives you exposure to both metals at different price points. If you have $10,000, buy 1 full ounce of gold and 200 ounces of silver. Store it securely at home. Consider a private vault for a portion of your holdings. If you have $50,000 or more, build a significant position. 5 to 10 ounces of gold, 500 ounces of silver. Consider allocated storage in multiple jurisdictions. Singapore, Switzerland, and domestic private vaults. Diversification protects against any single government action. Step 2. Reduce dollar exposure. Look at your net worth. How much is in dollar-denominated assets? Bank accounts, bonds, cash value life insurance, fixed annuities. These are all promises to pay you dollars in the future. If the dollar loses 25% of its value, so do these assets. Shift toward real assets, real estate with fixed-rate mortgages, commodity exposure through ETFs or physical holdings, productive farmland, energy investments, things the world needs regardless of which currency is dominant. Step 3. Prepare for volatility. The transition will not be smooth. There will be currency crises, there will be market crashes, there will be days when everything seems to be falling apart. Do not panic. Do not sell your hard assets during the chaos. That is when the wealth transfer happens. Weak hands sell to strong hands. Be the strong hands. Keep 3 to 6 months of expenses in cash for emergencies, not as an investment, but as a buffer. This allows you to avoid selling assets at the worst possible time. Step 4. Stay informed. The timeline I shared is their plan, but plans change. Events accelerate or delay implementation. You need to monitor developments. Watch for Saudi Arabia accepting yuan or units for oil. That is the trigger event. Watch for major central bank gold purchases. Watch for BRICS summit announcements. Watch for changes in Treasury foreign holdings data. I track all of this on this channel. Subscribe and turn on notifications. When critical developments happen, I will break them down immediately. The document they tried to bury reveals everything. The BRICS currency is real. The timeline is set. The gold accumulation makes sense now, and the dollar's dominance is ending. But there is one specific indicator that will signal when the transition accelerates from gradual to sudden. It is a data point that the Federal Reserve watches obsessively, and it just crossed a critical threshold for the first time since 1971. I break down exactly what that indicator is and what it means for your money in this video right here. Click it now. This is the most important chart I have ever shown on this channel. I will see you there.